Here we have the 4-hour price chart for NIO Incorporated, stock ticker NIO. So as we can see here, the stock continues to trade lower, and we are still trading within this broader descending triangle pattern that we've been watching for quite a while now. Most recently, what we've seen here is a price low that has posted at the $3.63 mark, which is just ahead of the prior support zone that we've been watching for quite a while as well. Specifically, this marks the price low, which came in during the April 22nd trading session, which posted at $3.61. As things currently stand, this stock is trading well below its exponential moving average cluster. As we can see here, the stock is well below its 20-period EMA and 50-period EMA, and then all four of these exponential moving averages are now focused in the downside direction. If we were to look toward near-term resistance levels, the first level that we would need to watch would essentially come in at this $4.15 mark. The reason that I point to this is because this is the area that marked an old support zone which held prices during the June 28 trading session. Specifically, when we see a price low like this or a support zone, we will start to believe that this support zone will start to act as resistance once it's tested again later from the bottom. So in other words, from the downside. For these reasons, we could see some confluence here between the $4.15 level marking this prior low and the 50-period exponential moving average, which is this orange line here, due to the fact that the orange line is rapidly descending and is likely to soon come into contact with this $4.15 level. In addition to this, we also need to remain cognizant of the fact that this descending downtrend line that characterizes the descending triangle pattern is also rapidly declining and is now coming into contact with this $4.15 level. For these reasons, if we do not see an upside break here relatively soon, this will suggest that we see a downside break of this descending support level, which comes in at $3.60. Moving down to the 15-minute price chart, we can see that more near-term support levels have started to post at roughly $3.75. Currently, what we're dealing with is a sideways consolidation pattern that has already started to break through two of its short-term exponential moving averages. Specifically, these moving averages can be found with the 20-period and 50-period EMAs, but we have not yet broken above the 100-period EMA, which has been tested on several occasions. Here we can see many different instances where this resistance level has been tested during previous trading sessions. For these reasons, a break above this 100-period exponential moving average on this 15-minute price chart is going to be quite essential if we're going to see prices retake the $5 mark. On a more near-term basis, we would need to see a break of this 200-period EMA in order to retest resistance levels which are found at the 200-period exponential moving average, which is currently found near $3.90. Pulling out to the 1-hour time frame, we can see some interesting activity here within the exponential moving average cluster. Specifically, we have started to take a fairly significant downturn following the July 31st trading session. Right before this time period, we did see prices retest prior highs, which came in at $4.49. For these reasons, the $4.50 level is going to also be a critical price level to watch here going forward. If we're able to see a break above here, this would mean that we break above all of the major exponential moving averages, the descending downtrend line, and the prior price high, which posted during the July 31st trading session. Here we have the hourly price chart for Tesla Incorporated, stock ticker TSLA. So as we can see here, the stock is starting to flatline a bit after reaching some fairly significant price declines in recent trading sessions. Specifically, the new price lows that we're looking at currently come in at $182, and this is a massive difference from the $271 that we were seeing during the July 11 trading session. Anyone that's been watching my videos has known that I have been paying a special amount of attention to this July 11 trading session because I do believe that this was somewhat of a line in the sand as far as the Mag 7 stocks were concerned, as far as the technology space was concerned, and as far as the broader stock market was concerned. For the most part, we started to see several major technology stocks start to trade under a significant amount of selling pressure, and this has continued right up until the current trading session. Some of this selling pressure did hit Mag 7 stocks particularly hard, and as we can see here, the Tesla stock chart has fallen victim to these types of price declines. So specifically what we're looking at here is a current consolidation range that is forming at lower levels. In addition to that, we do need to pull out on this price chart a bit so that we can see the broader context and see exactly what has happened within this stock's broader uptrend. So specifically what we're looking at here is a major rally that occurred from roughly 138 all the way to 271. As this happened, we have seen prices retrace a significant portion of that rally, and we're currently breaking through the 61.8% Fibonacci retracement of this broader price move. So this is fairly significant given the fact that we will now be looking at the 78.6% retracement as the next level of support. All of that said, we have to note the fact that prices did not see a daily close below this 61.8% Fibonacci level. Specifically, this does come in at 189.50. So this is a major level to watch here going forward. As we can see here, if we move back into the price chart, zoomed in viewpoint, we can see that prices did actually reverse after posting these significant declines. In addition to that, we were looking at a price gap, which had formed for this stock. So for Tesla shareholders, this is somewhat encouraging given the fact that we are starting to see a bit of a sideways consolidation, and this does lend some credence to the possibility that the stock is attempting to find support near current levels. At the same time, we have to take note of the fact that the stock is still trading below all of its major exponential moving averages on the hourly chart. So as we can see here, we're currently running into some resistance right near the 20-hour exponential moving average, and this means that we have not even tested the 50-hour exponential moving average, which is the orange line here. Ultimately, what we will need to see in this stock is a break back above this 215 mark, because this is essentially what marks the 200-hour exponential moving average for this price chart. If we do see a breakout here to the top side, we can start to refocus our attention on the double top resistance area, which formed just below the $235 mark. As we can see here, the indicator reading is still trading near mid levels, and this does not give us major direction here, one way or the other. What this does tell us is that the stock can still move very far in either direction, and given the fact that we're currently looking at a consolidation zone, all this points to the possibility that we are on the verge of a major breakout here in one of these two directions. In other words, it seems unlikely that this period of consolidation is likely to last much longer. Overall, it's clear that a significant amount of damage has been done to this chart on a technical basis. If we were to see further price moves to the downside, we would be targeting the 78.6% Fibonacci retracement for this stock, which currently comes in at 167.50. Given the fact that the most recent close ended near the 197.70 mark, this essentially means that the stock could still fall by more than $30 in order to reach this downside price target. If this were to occur, more than likely we would be seeing the indicator reading fall into oversold territory, and then short-term bounces from that level would likely become imminent. Here's the current stock and trading analysis for Tesla Incorporated, stock ticker TSLA, and NIO Incorporated, stock ticker NIO. Our high-value trading strategies membership is currently available for a limited time for only $9.99 per month. These high-conviction investment strategies are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.